Hello, good evening and welcome. Well, the gold price is up nearly 20% so far this year, jumping another $200 an ounce last night. My colleague Asimir Nyede put together this package so that we could understand what's happening a little better.
Gold has surged past $500 an ounce, confounding even seasoned market watchers, including Rob Armstrong of the Financial Times, who admits being persistently wrong on the metal. The usual explanations don't fully add up. If gold were rising because currencies are being debased or because inflation is about to surge, you would expect warning signs in bond markets or the dollar. They aren't there. Inflation expectations remain muted. The dollar hasn't collapsed, and central banks actually reduced gold purchases last year. So what's driving the rally? Fear. Historically, gold doesn't respond consistently to inflation. It responds to moments of deep uncertainty, wars, crisis, systemic stress. But even that raises questions. After the 9/11 attacks, gold rose about 28% over 2 years. Over the past 2 years, it's up 145%. That kind of move has only happened twice before, around 1980 and 2011. Both were poor entry points for investors. Silver, a metal with an even stronger bubble history, is surging too. That adds to the unease. One explanation is that markets themselves are distorted. Bond yields may be artificially suppressed by central banks. Currency markets may no longer be reliable signals. In that world, gold becomes the outlet, the asset investors turn to when price signals elsewhere feel managed. There's another angle. Compared to US equities, especially the S&P 500, gold doesn't look extreme. That supports a darker interpretation. That's the long era of confidence in financial assets is fading. That instability isn't temporary, it's structural. To believe the gold rally is justified, investors must accept one thing. Either markets are mispricing risk, or the world is becoming materially more dangerous. Or both. And that's the uncomfortable question gold is now forcing investors to confront. My name is Asimir Nyede, and you're watching biznews.com.
The Zurich-based Swiss investment bank UBS is one of the global giants. And so its chief strategist, Bhanu Baweja, is a man in great demand. Well, he's in Johannesburg at the moment, and our partners at Bloomberg got hold of him to find out why he is so bullish about precious metals and indeed South Africa itself.
Is the coast clear for precious metals to keep on rallying then? I mean, the momentum has been outstanding since the beginning of the year.
You know, it's the answer to that is yes. The coast seems to be clear for the precious metals to continue to go, but we really have to put this in perspective. As of August of last year, which is less than 6 months back, gold was trading at around 3,200. So it has rallied more than 50% within a matter of 6 months. And silver, as you've noted in your comments earlier, has done much more than that. It's hard to deny that there is a little bit of froth in the near term in some of these precious metals. So I don't think any one of us should be very surprised if you see a little bit of profit taking. I mean, the kind of retail volumes that you're seeing in China makes you believe that there's a lot of speculative element in this, right? So you're not seeing the same weakness in US Treasuries. If this was a sell America trade, people would have been selling US Treasuries hand over fist. You don't see that. So there is a little bit of inflow, some of it legitimate and some of it speculative in these metals. So I don't think any of us should be surprised by a near-term pullback, but the fundamental reasons why these precious metals complex is as big as it is does remain, and I think you can continue to go higher, but we've moved too far, too fast from a near-term perspective.
Bhanu, I've got to ask you, since you're speaking to us from South Africa, and we spent a lot of time on our show discussing the latest dynamics in South Africa, I mean, it feels as though a lot of tailwinds are in place. I was speaking to the South African Reserve Bank governor last week. We also spoke to the finance minister. Reforms are in place. They passed the budget. The country received a rating upgrade. Johannesburg Stock Exchange, good performance last year. And the currency continues to do quite well as well. What is your outlook for South Africa this year, and do you sense that this momentum, the positive tailwinds, will continue into 2026?
You know, it's so good to be here. It's such a beautiful country, and I've been here so many times in the past, in times which have not been so good for this country, which was so unfortunate. And so therefore it feels so much nicer to be here at a time when things are actually beginning to go extremely well. And they're not happening by accident, they're happening by design. So policymakers have taken concerted steps, and that is showing in the results, right? You look at the primary balance, it's turned around to a surplus. You look at inflation, it's coming down to the extent that the South African Reserve Bank has actually changed their target from 3 to 6 down to 2 to 4. So these are really ambitious steps, and they seem to be coming to fruition. Certainly there's a tailwind. I wouldn't deny that. There's a tailwind from sort of global factors as well. You look at the prices of precious metals, you look at the prices of some of the other commodities, and South Africa's terms of trade have therefore done well. Oil prices, which South Africa imports, has actually, stabilized at a low level, where if you look at gold prices, platinum, palladium, rhodium, coal, iron ore, all of these prices, some of South Africa's, the commodities that it sells, has done extremely well. But I think also the change on the fiscal side has been absolutely crucial in terms of pushing this currency stronger, in terms of bringing the inflation down. So South Africa is actually going through the opposite in bonds and currency of what Japan is going through. We were just speaking about Japan, where the currency and FX have been spiraling downwards. In South Africa, it's the other way. We were speaking about the Japanese yen and the real yields there. Real yields in South Africa, if you look at the long end, are close to 4.5–5%. That's very attractive in a credit that actually is slowly improving. So it's no surprise to us that the South African rand is doing as well as it is. Growth needs to improve. Manufacturing needs to improve. So there's a lot of work still to do, but so far so good in this cycle for South Africa.
Robertson, a small town in the middle of nowhere where a wine farmer claims to have sold a Volkswagen Up to WeBuyCars. A farmer. What car did you really sell them?
A VW.
Right here in Robertson.
Small town, but we know about WeBuyCars.
Yeah, but what's a farmer doing with a VW Up?
It was just a runaround.
Cool cover story. And I see you traded it in for this, like a double cab Benay. Were they all out of ranges?
WeBuyCars, the easiest way to sell your car by far.
We've been keeping you updated about the frustration among South African livestock farmers on the slow burn foot and mouth disease, which has now become a raging veld fire disaster. The man charged with managing it is the leader of the DA, the agriculture minister in the government of national unity, John Steenhuisen. Well, he told his colleagues at the DA's internal podcast that he's pretty confident things will work out.
What is foot and mouth?
Well, if you'd asked me 2 years ago, I would have said it's something that politicians got.
I was just, I was a bit careful, do you?
I thought it was something that politicians got, but it's an infectious disease.
Yeah, it's something politicians do.
Many people would say that. Don't encourage Peter Bruce. So what is it's an infectious disease that's transferred from animals to animals. It only affects cloven-hoofed animals, so sheep, goats, cows, and it's particularly virulent in the livestock sector. When I came into office as minister, I realized there was a problem with foot and mouth disease, and it was largely linked to poor biosecurity and a moribund scientific capacity with the collapse of Onderstepoort and the constraints that we had at the ARC, etc., Agriculture Research Council. So we started setting out to fix those things. We then called for a indaba. And for the first time ever on FMD, government, academia, the science community, farming organizations and industry bodies came in under one roof. That FMD Indaba then selected a ministerial task team Half the task team is made up of the private sector, private vets, industry representatives, half of government. The first time ever there's been a public-private partnership at a ministerial task team level on FMD. They were tasked then to come up with strategies for us to beat FMD, not just to deal with sporadic outbreaks, but to deal with FMD. That ministerial task team came back with their report, and out of the options they presented, we chose to go with the vaccination route, in which we intend to vaccinate the entire national herd. And this isn't a thumbsuck. This is something that's designed by scientists, designed by the with partnership with the private sector, and the strategy is the right one. It's the same strategy that Brazil and Argentina used, similar peer countries to us, to become FMD free by vaccinating the entire national herd. Now, Brazil took 21 years to get to FMD-free status. I think we can get to the same status within 8 to 10 years. But what frustrates me is that I hear now that there's this criticism, you've got a 10-year plan, as if we're not taking care of what's happening now. Of course, the 10-year plan is to get to a certain point. And as I said, in leadership, you've got to understand where you want to go in order to set the steps in place to get there. But of course, it has an immediate part of the plan, and it's set out very clearly in the press briefing I gave last week. We have a 12-month plan now to get to a 80% vaccination of the entire national herd within a year, to be able to reduce the incidence of FMD by 70% in 12 months through the procurement of vaccines and the rollout. We, to date, as we sit here today, have vaccinated over 2 million animals around the country. That is a significant, it's the largest scale vaccination for FMD that's ever taken place. And we've got vaccines now coming this month, and a whole lake of them coming in February through what I've done in opening up the FMD vaccine market. In the past, we've only relied on Botswana for their vaccine. Through the reference laboratory at the ARC, we've been able to match our strains with vaccines. For instance, the Junevex vaccine called Dolvet from Turkey, the Biogenesis Bago vaccine now from Argentina, and we've been able to, through our reference laboratory, match those to the strains we're having. I've done emergency imports of those vaccines, and we're finalising the import permits of those on an emergency basis because we're facing a crisis. And the idea is then to have a river of vaccines flowing in from different sources. So you're not reliant on a single supplier, to create a lake of vaccines that is then able for us to vaccinate every one of the 14 million cattle that we have in the country.
Well, there's a bit of contrarianism in tonight's wealth building. Piet Viljoen has been very bullish on South Africa and South African assets when everybody else has been running away from them. But now that there's so much good news coming in, he reckons it could be time to start getting a little nervous.
So it's been a banner year for South African assets, and nothing really has happened. There's been no real fundamental change except for two things, and I think these are the real fundamentals that one should be paying attention to, as opposed to politics. The one thing that has happened is the prices of precious metals has gone up a lot: gold, platinum, and silver. Okay, we don't produce much silver, but we produce a lot of gold and a lot of platinum, and that's good for our balance of payments, which ultimately is good for the currency and good for economic growth. So I think our prospective growth rate is better than it otherwise would have been. On top of that, our interest rates have come down from exceedingly eye-wateringly high levels, bond yields of 12, 13, 14% even at one point, to bond yields of 9 to 10%. So that's a 4% reduction in your risk discount rate. So we've had two positive effects. The future cash flows that South Africa as a country are going to generate, which South African corporate share in, are higher than they otherwise would have been, given the precious metals backdrop, plus low oil prices, which also helps. Those cash flows are bigger, and you're discounting those cash flows with a lower interest rate, which means the present value of those cash flows are a lot higher. And that's been starting to have been reflected in the prices of assets in South Africa. I don't think it's fully reflected, but the process has started.
How far along that trail are we, saying that it's started to be reflected?
I think when people start getting excited about South African assets, then we'll probably have fully reflected most of the prospect benefits. Bearing in mind that our interest rates, even though they're 9 to 10% for bonds, long-dated government bonds, that's still a very high interest rate. Our inflation rate is similar to that of the US, in the region of 2.5 to 3%. Our bond yields are 9%. US bond yields are 3.5 to 4%. That's a massive premium we're being paid to hold South African assets. And while that premium is in place, I'm a happy holder of more South African assets than I otherwise would have had in a sort of balanced portfolio.
Thank you for joining us. We'll be back again tomorrow. Cheerio.